And it's 10:45, and I'd like to welcome everybody to our live coverage of the March WASDE report that will be released in about 15 minutes. My name is Sterling Smith, and I'm the Director of Ag Research at AgriSompo North America. And we're going to be getting this report, and we're also going to talk about a few other things. So without further ado, I'd like to thank everyone for joining us this morning. And we have a couple other things going on that are of import that we'll like to talk about first. Before we move on to the WASDE, first thing is we did get the monthly jobs report this morning. And once again, the report proves to be quite strong. The increase in non-farm payrolls, 275,000, which was a little bit less than the initial release last month, which was 353,000, but that was revised down to 229,000. But more importantly, it was better than expected at 200,000. The unemployment rate did nudge up a little bit to 3.9%, but when I ripped the report apart, that's actually due to an increase of available workers more so than any sort of job decreases and things of that sort. The things the Fed are watching concerning inflation, the average hourly earnings eased up noticeably. As you can see, last month that was up 0.6%. As very often, raises happen in January in a lot of companies, and that tends to inflate that number. But this came in at a very comfortable 0.1%, and the year-over-year increase at 4.3% was a little bit below the 4.5%. So all in all, this report is fairly favorable for all parties concerned. Unemployment remains low, and some of the inflation pressures that had been driving things have eased off a bit noticeably. Now, next week, come down here, we have the CPI on the 12th and the Producer Price Index on the 14th, and these numbers will be closely watched. Now, why this matters, something here that's been helping out the grain market. This is a weekly chart of the dollar index. And as you can see, we have been trending nicely higher, began to form some support, but here over the last 3 days, we have pushed through that support. And what this does is this tends to provide a tailwind for commodities, or in this case, we've at least removed some of the headwinds that have been plaguing the commodity markets. The good news is things like gold go up. Corporate earnings, if you're a multinational company, think of Microsoft or an ExxonMobil, something like that, your earnings tend to improve with a weaker dollar. The downside is it does drive commodity prices up for things like energy, and that can be a little bit of a problem, but the energy markets really didn't move too much on this. Now, this week has been a pretty good week, really, for the grain markets. As you can see, the corn market, actually, for the first time in quite a while, we've managed to string together, this is a daily chart, we've strung together 2 winning weeks in a row. And it's been a while since we've managed to actually get the market to turn around and move higher. There's some caveats with this, though. A lot of this has been propelled by short covering. 2 weeks ago, we set an all-time record fund short position. Very often, when we set a new record, that tends to prompt buying, as the idea that we've run out of sellers has come out of the market. And that certainly did help drive the corn a little bit higher here. You can also see the stochastic crossed perfectly, gave us a solid buy signal, and we moved higher, as well as the RSI was deeply in the green, indicating that we had come into some very oversold conditions. A lot of the fund trading is algorithmically driven, computer-driven type things, and when they see these signals, that tends to push things higher. Now, we're going to have a report today that's going to show, big ending stocks again. There's no question about that. The real question is just how big are they going to be, and how much of this rally is actually going to be sustainable is another question. Now, balancing that bit of nervousness off this bounce, we do have some fairly serious drought conditions in all the states that end in A, the Dakotas, Nebraska, Minnesota, and almost all of Iowa is either in a drought or abnormally dry. We're getting a little bit of precipitation across the Midwest today. It's snowing here in Omaha, but it's not, anything major. And this is the only precipitation other than a chance for a shower next Thursday that we have in the forecast for the next 2 weeks. Temperatures are expected to be abnormally warm and things to be abnormally dry. If this continues, this is going to create a situation where we may have some issues with some yield numbers and things of that sort setting up for the next crop year. And depending on the fund's temperament and how closely they're watching this could prove to be a bit of a driver for the market. So again, as we've been emphasizing this year more so than any, watch your basis, pay attention, watch our action indicators, make sure to read, the daily comments. And if you're worried about questions, please feel free to ask, because this year is going to require some governance. We're not going to, most likely, unless we see a severe drop, enjoy much in the way of periods of higher and sustainably higher prices. Now, moving on to the soybeans. The soybean market, again, it bounced a little bit today, notwithstanding. And as you can see, we found resistance at that 20-day moving average, which is a little bit troubling. The soybeans had not been as oversold. The funds have been more of a mixed player here. They were sellers a couple of weeks ago, buyers a week ago, and then sellers again. So again, we are not getting as solid of a footing in the soybeans as we would see in other things. Part of this is Brazil. Brazil's harvest is going on right now, and they're probably 55-60% done with that. And these beans are now making it into the market. If you watch the export sheets, you can see we're still exporting beans to China, but we have not exported any corn to China in a couple of months. And we are going to see these Brazilian supplies getting tapped, and as they come to market, that works as a natural weight on prices. On the other hand, this monstrous Brazilian crop, and we'll be getting some information on this in about 9 minutes, is not going to be as monstrous as initially thought. It's still going to be big. It's still probably going to be a record because their acreage has gone up so much, but it is not as big as anticipated. And while it's not something that will make the soybeans screamingly bullish, we can take one of those bearish weights off of the market. Now, looking at the wheat market, wheat is back and feeling a heavy downtrend. We've seen global prices, cash wheat prices, drop noticeably. Russia has been willing to pump plenty of wheat into the market. In fact, looking at Black Sea prices, they correspond to $4.78 a bushel. So there is plenty of wheat. No one is being aggressive about buying it. And this week we saw China cancel 2 big orders that they had put in. They had made 2 big export purchases totaling about 250,000 tons of SRW. They have canceled those. So that is adding a little bit to wheat's problems. And I think we're just seeing some Friday afternoon covering and a little bit of that going on, just simply because it's the end of the week and the shorts have made money and they want to take that home. And we're going to talk about something we don't always talk about, because this is a very teachable moment here for how grain markets behave, but we're not going to use a grain market to do it. We're going to talk about our friend cotton. And if we look at the cotton market here, we have seen a very, very solid bounce in this market. And this has been driven almost entirely by fund buying. They were a fairly substantial net short. They have now become not a record long, but a very big long in the market, and that has pushed prices higher. As you can see, yesterday we traded basically a limit up day. Today we're coming into this report, and we're almost 4 points as limit. We're almost limit down. This sort of volatility indicates topping action. And this rally did not have a lot of big fundamentals driving it. It had funds chasing each other through the market. If the, like the musical chairs game, the music stops, there's going to be people looking for a chair in this market. It can come back down if we don't get some new fundamental news. We need to keep that sort of behavior in mind when we're thinking about the grain markets this year. And we may have gotten our first little blast of it here just now with this bit in the corn. As we move into the planting season, depending on how the weather ferrets out, we may see more of this type of volatility. And again, this is the sort of thing you need to be aware of. Selling cotton at 80 cents a pound, not so great. Selling it at $1 a pound, a lot better, especially if it's Wall Street just driving the prices up and we get this artificial pop and we can take advantage of it. And that's something where this year, more so than what we've seen in the last 3 years, we need to be aware of this And we need to always have our tools ready to take advantage of these things when they happen, because this one's actually been fairly long-lived. It's lasted a couple of weeks. Very often, these only last a few days. So that is something, again, that we need to be aware of. So let's talk about today's report. This is the March WASDE. This is not in our cycle of big and exciting reports. February, March, and April typically are not as big of reports, simply because the USDA can, but very rarely does anything about the production side of the balance sheet. That will most likely stay the same. And if they do make changes, they're only fractional. Now, coming up on March 28th is a big day. That's the prospective planting report. And that will be the first time we get a picture of, what we think acres are going to be. And that's going to reset some of these balance sheets and going to change some market ideas. Will we see all those extra soybean acres that we thought we'd see in the Outlook conference? Will corn acres get cut more than what's going on? There's going to be some moving parts in there that can definitely move markets. And we will have live coverage for that on the 28th. So make sure, excuse me, I'm still getting over the bug here. Make sure you're watching and paying attention to that, simply because that will be, again, a period where we could see some volatility and can change the temperatures of these markets a little bit. Coming in today, we've got corn down a little bit, soybeans down just marginally, and wheat is up a little bit, mostly again on, in front of the report market positioning. Now, looking at what we're expecting for the report that'll be out here in about 3 minutes. Corn ending stocks, we're expecting that to come in at 2.54 billion bushels. My estimate on that was I was actually at 2162. I increased imports fractionally. For soybeans, we are looking at soybean ending stocks expected to be at 318. The 315 number last time, my personal estimates, I did not change that. I did not expect to see anything change in the dynamic of the soybean market just currently. So probably not going to see any big surprises there. And again, if we get something that moves, it's going to be this export number. Most likely that's going to change. Moving on to cotton ending stocks at 272. We were at 280 last time, and again, no big changes expected. For total wheat ending stocks at 657, the street is guessing absolutely no changes. And if we look back over history in the March report, very seldom does that change. I cut that number a little bit because, again, I bumped up exports to compensate for that stuff that China bought. They've canceled it, but that will not be reflected on today's report because the report was obviously prepared before those cancellations, which actually happened today. Now, moving on to the bigger questions where we can get some volatility. Soybean production in Brazil, 152.82 is the guess. The guess last time around was 156. I've seen more and more private estimates coming out of Brazil showing a number closer to 149, 148s are even starting to creep into the conversation. This crop started out at 162 million, so we have shaved quite a little bit of production off of that. And hey, it looks like Brooks has joined us. Brooks, how are you?
Hey, I'm doing good. Just listening to all this bullish news you're giving us.
Well, just the facts, man.
No pressure. No pressure.
Now, the corn number, we're at 122 for street estimates. The last time around was 124. I've seen those numbers start to slink back a little closer to 120. So again, we're not necessarily getting bullish news here, but we're taking some bearish weight away, which is kind of sort of bullish. Argentina, I got nothing good for you though. 55, probably not going to change in it. Could even go up a tick or two. Soybeans at right now, 50.3. Again, no changes. I actually pushed that up to 51 simply because every once in a while, Argentina gets good weather. Most likely the conversation we're going to be having next year is not going to be quite the same, simply because the weather patterns are changing and we're moving from El Nino into La Nina. And that is also creating some concern about exactly what kind of weather we're going to see here in the U.S. Brooks, with 7 seconds before the report, do you have anything to add?
They don't call me the greatest color guy in sports for nothing, Sterling. No, I think, you've probably gone over it, and I apologize for being late. Now I'll cut my comments off and let's see what we got.
Well, corn 21.72, sharply unchanged. For the soybean number, soybean ending stocks, 315, about as expected, sharply unchanged. Wheat ending stocks, 673, they actually pushed those up a little bit. So wheat, we'll call this mildly bullish. We'll call this, we missed expectations, but not enough to really drive the markets that much. And soybeans were exactly as expected. Moving down to the things where we could see things change. The soybean production number for Brazil, oopsie 155. So we kind of missed that 152 number there. And remember, the USDA does lag the private estimates. So not too much of a change from 156. For corn at 124, again, we are unchanged from the last report. And for corn production in Brazil, or Argentina, excuse me, they bumped that up to 56. Soybean production, they left unchanged at 50. So, what do you think of this report, Brooks?
I think it's the proverbial yawner. You called it. We'll see how the market, reacts to it. I guess at this point in time, when we're running out of days for that South American bean number to really change very significantly, and typically we've got maybe a week, and I don't think we're going to see big changes there. Like you said, could we take that down a little bit from the USDA's perspective over the next 30 days? Probably nominally, but when we talk in bushels down there, to kind of replay the soybean crop in Brazil anyway, we started off with the expectation of somewhere around 5.9 billion bushels of production in Brazil. And, we've seen the play by play through the growing season where probably the lowest private estimate came in at 5.3 billion bushels. Now, I talk billions of bushels so everybody can kind of compare it, but our production here in the United States this year will be somewhere in the mid fours, somewhere probably between 4.2 and 4.5. I haven't got that number in front of me, but I throw it out there just to see how big that crop is. So even if we're talking about a reduction from 5.9 down to 5.7, 5.6 billion, still a record crop, still very, very big, even compared to what we grow in the United States. The only other thing I would add is the Brazil corn situation. It's going to be ever changing and probably more important than it's ever been on a global stage. So when we take that Brazilian corn number and we look at numbers in bushels per acre, to me, the big change over the last 5 years has been that production number, Sterling. I think we've gone from somewhere around 4 billion bushels of production around 2020 to an estimated 5.3 billion this year. Now, keep in mind, about 60 to 65% of that is double crop. And so that's corn that's being planted here over the last 4 weeks and continues to be planted. That planting window is coming to a close, but it moves the volatility period a little bit earlier on the scheme of things. So Sterling, where we normally see that May, June volatility, I'm not so sure we couldn't introduce last half April into that as well.
Oh, I think given our current weather situation, particularly again in those states that end with A, if we don't see some changes, we could definitely start to see that volatility start maybe as soon as April Fool's Day.
Yeah, and I think that's really, really important to remember, because we've kind of got this perfect picture painted, okay, and that perfect picture is we need Ukraine to fire on as many cylinders as at least as it's been firing on in the last 2 years. And to really break that down, Ukraine exports of corn were estimated at somewhere around 850 million bushels last year. Okay, leaving Ukraine, not Black Sea corn, but just Ukraine. compared to just slightly over a billion if we go back 3 years or the pre-war years. So we've kind of got that unknown. The market is anticipating that 850 million being dumped onto the world market. You've got the Brazil number that I just went through, and remember, lots of that's double crop. And if you're a double crop grower, you know how finicky that crop can be. And then in the U.S., Sterling, I think we're 182 bushel the acre is the trend line, and the odds of that, you talked about it, aren't high.
No. And one other thing, corn prices are noticeably depressed. If you are, in fact, that double crop farmer in Brazil, you may not be quite as aggressive about planting, corn sitting July, corn at 447. How aggressive are you going to be about planting that versus being at 547? And
I think that's something we've got to keep in the back of our mind. And normally, if you look at charts from last year, Sterling, we had a lot more chances to sell beans. In other words, if you look at our AgriSompo North America action indicators, they triggered far more frequently on beans than they did on corn. In theory, had we had them over the last 8 months, it may be this year that corn may lead that volatility charge. To Sterling's point, maybe we're surprised with fewer acres of corn than we anticipate. Flip side of it is we're probably going to add bean acres to the plate, and we've already got we've already got the largest producer of beans behind us, and they've had a successful crop, not a disastrous crop. We'll put it that way. So corn may lead this volatility charge, and I like what your comment is there. I think as early as April 1. I like that.
And one other thing to keep in mind, the inflation numbers next week, I'm expecting those to be fairly calm. The employment numbers are working. We had a good report for all parties involved here today. If we see interest rates continue to back up, it wasn't that long ago we were talking about the 10-year was trading at 5%. That traded as low as 403 on this jobs report.
Yeah.
That is starting to weigh on the dollar. And if we can continue to get the dollar in a downturn, because when currencies lock into a trend, they tend to stay that way. And I'm pretty sure the political powers that be will be quite happy with the dollar softening up a little bit. That improves corporate earnings, that improves on-farm earnings, tends to make the stock market move higher. There's some good things about having a currency ease back a little bit. If we can see the dollar ease off a little bit, again, not ready to get screamingly bullish yet, but we're taking another one of those bearish weights out of the wagon. And that's,
Sterling, we often measure farmer optimism or pessimism in the markets. And I think 2 to 4 weeks ago, we saw that.
I think we saw peak pessimism, and it corresponded right directly with that record fund position. The two were right there together, and that something
of production.
Yeah.
I think we're slightly more optimistic than where we were at 4 weeks ago, surrounding things like you talked about, rates. Will we have the hope of a new crop rally? Yes, absolutely. We're going to have to take action. Yeah. Is it going to be fun? No, you're not going to like any price that you sell at because of what we just came through the last 4 calendar years, but there will be opportunities out there.
And you'll probably like the prices you get more than, let's see, December corn right now is at 466, and the low of the move was, I don't know, about 445 or something of that sort. 495 isn't great, but it's 50 cents a bushel better than 445. That's the way we have to look at it.
Yeah. Throwing some optimism out there. I ran a 36-year history the other day, and we have never failed to reach our new crop high that occurs in the month of January, which was 501 December futures in the last 36 years. I don't like $5 necessarily, but when we take a look at this whole picture, we got to be ready to roll if that happens, and it probably will. Odds say it will. History says it will.
Yeah, and pay attention if it can't hold that $5 level. I can pretty much tell you there's going to be some fun selling coming in
Yeah.
behind it.
You know, you mentioned the funds, Sterling. That's another reason. When we take a look at the fund situation, you know, extremely short conditions in both corn and beans when we look at spec funds. And to make matters worse, we got a tremendous amount of farmer unsold corn in the country. And again, that's kind of testament to the fact we didn't have any opportunities except all the way back to June and July of last year. I mean, really just no opportunities where the market just screamed, sell me, and all those indicators lined up. So the farmer has got room to take this market down just a little bit. We're going to see how much money they need prior to planting. It can grind lower from here. The bean situation is a little different. And while the fundamental factors don't look good for beans, spec funds are short. A higher percentage of that crop is sold from a farmer perspective. So there's not that necessarily that fuel to sell off the market below where we're at. Sterling, any thoughts on those situations?
Um, the spec position in the beans is still pretty large. Now, I have noticed over about the last 3 weeks, we've seen some index fund commodity outflows. These are more investment fund type things. And no one's going to like me for saying this, but it's a reality we need to deal with. If we can continue to see crude oil hold above $75, we may see some net inflows into those index funds, and that will result in some grain buying. It doesn't produce the same market volatility that spec fund buying does, but it can help add to that floor. And again, they were sellers last week. Again, maybe we can try and move some of these bearish weights off of us.
Yeah. Yeah. Good point. Good point. Basis levels, poor across the country. Um, Probably a testament of lagging exports, a testament to crush margins, you know, coming down considerably from where they have been over the last couple of years. Seeing the river market lift its head just a little bit here over the last 5 or 6 days. And so if you need to move something prior to planting and that window's closing fast, take a look at what's happened in the corn market really the last 5 days from a basis perspective. And it's as good opportunities as we've seen in 30 years, unfortunately, at least through most of the I states and the South. It's about 20 cents less than where we were at it, you know, historically over the last 3 to 4 years.
Yeah, I would agree. And just taking a look here at how the market's performing, well, May corn's at 435 3/4. It's down 2 1/4. That's about where it was when the report came out. December at 468, down a penny. Beans actually had a very microscopic bounce. New crops up 5 cents, and July's up 1/4 cent when we were printing red ink. Wheat's doing a little bit better. We didn't talk too much about the wheat market. The wheat market fell off a cliff this week, combination of two things. One, cash prices are not very good, and that's weighing on the market. There's plenty of supply. No one is in a hurry to go buy the stuff. And along with that, China canceling those two cargoes, or not two cargoes, they canceled basically 250,000 metric tons,
Right.
has come in here and weighed on the wheat market a little bit. But Kansas City and Minneapolis have outperformed Chicago on a relative basis. And perhaps, we can see if we're going to get around when something's going to lead the wheat higher, it's going to have to be Kansas City and Minneapolis. It's not going to be SRW doing it. And wheat is just a little bit higher. And cotton off the report is, well, it's still down sharply, but it has bounced ever so slightly.
So, Sterling, I want to take just a couple minutes and make sure everybody's got this on their radar. But March 28th is our prospective acres report, and we're going to do that live. And so, normally we've got a holiday on Friday. So, normally it would be close to the 30th or 31st. It's going to be on Thursday, the 28th. We're going to get some correspondence out for you in the next week. But Sterling, I'll put you on the spot right now. Okay. Corn and beans. United States, March 28th. What is your corn number on acres?
Oh, my corn number on acres. You know, when you put me on the spot like this to nail down an esoteric number, I don't have that exact
He hates
number.
it when I throw these to him on the fly like this
Most
because
of the
he's got
time
a
it isn't a
formula for this.
problem. But here's the deal. I think you're going to see a number for corn that's smaller than the USDA outlook by, let's call it 500,000. I think you're going to see a number for the soybeans that's pretty close to the outlook number. My thinking on this is those very, very marginal acres of corn, where the price of corn is, no one's going to be gung-ho about planting those. I think they're going to be willing to put their hands in their pockets on those acres. I don't think anyone's going to have a problem with the soybean acres. So we're going to lose some of those prime time acres, and we're going to keep things where the soybeans are. Now, if the weather doesn't change up here and change real soon to the wetter, we're going to be able to get this crop in a big hurry. This thing will go in fast. I am guessing that we are not going to see temperatures below freezing in eastern Nebraska after about Thursday of next week.
Yeah, this weather over the next, I know it doesn't sound like very long, but what is today the 8th? Is that what it is today, Sterling?
Today
Yeah,
is in fact the 8th.
So we've got 20 days, but this weather in the next 20 days will have a huge impact on where that corn number goes. And the kicker is, I came from Maryland yesterday, and there's water standing in all the fields out there. You come back to Illinois, and we really got our first precipitation that we've had in a long time. And we need it in the worst way. You go to Sterling and you go to North Dakota, which I've been up in there the last couple of weeks, really, really dry, considering what we should see. Then you look at temps and you overlay that moisture that's kind of concentrated in the southeast. Remember, that's our early corn planting area, especially the Delta. And you throw temperatures, and really there is a divide on temperatures that almost matches the precip situation we're in, where we're looking at below normal in the southeast and in the south, and we're looking above normal up to Sterling's area, Nebraska, in the Dakotas. So it's going to be more impactful. My point is on the Delta and the southeast on those.
Yeah, you're going to see.
Season.
Yeah,
I think we're going to know how those acres come out.
Yeah, down where Brooks is and south of him, there's a problem around here. Our problem is just the opposite. And for eastern Nebraska, we have really now been in a drought really since the end of 2020. We have been well below average precipitation every year, and we're not seeing them change. And I have some early concerns that are we moving into a new normal where this pattern is reverting back to something like we saw in the 50s and 60s, where it was abnormally dry here all the time. That is, so something to be concerned about.
It is. Well, Sterling, we're running this thing in 11:18, and it's Friday. I know everybody's got fun things that they need to get done. If you're an agent, thank you for taking some time to listen to us. We know you're right in the midst of a crazy season here, trying to wrap things up. But I think it's always important to keep your fingers on the pulse of what's going on in the marketplace.
And everyone, let's smile and be happy. Beans are now up 7 cents, and corn is back to unchanged. So maybe that weakness in the dollar start to come back in. We're seeing gold go down, go up noticeably here. So maybe we'll get a little buying to close out the week.
Let's hope. Let's hope.
And
all right.
I'd like to thank everyone for attending, and make sure you are plugged in on March 28th, because I can pretty much guarantee you that will be a more exciting report than this one.
Have a good weekend.